Should you subscribe to Nexus Select Trust IPO or not? How are the financials? Let's see what brokerages say. Nexus Select Trust, owner of India's largest mall assets, has launched its IPO to raise 3,200 crore rupees. Malls such as Select City Walk, Elante Mall come under its umbrella. Upon listing, Nexus will be India's first REIT with rent-yielding retail real estate assets. Let's take a look at IPO details. IPO subscription date is May 9th to May 11th. Price band is 95 to 100 rupees per unit. Fresh issue is 1400 crore rupees. OFS is 1800 crore rupees. The portfolio is also highly stabilized with committed occupancy of 96.2% and 5.7-year WALE as of December 2022. At the upper band of 100 rupees per unit, the company commands a market capitalization of 15,150 crore rupees and the issue is at price NAV of 0.78x. It is offering pre-tax yield of 8% in FY24 at the upper price band. Now, should you subscribe or not? Choice Broking has given a subscription rating to the IPO and said, based on the fair asset value of 25,444 crore rupees, the calculated net asset value per unit is 120.9 rupees, which is 20.9% higher than the ceiling price of the issue. At higher price band, the calculated pre-tax yield on investment is around 8% based on FY24E NDCF. ICICI Direct Brokerage also gave a subscribed rating to the IPO and said, we assign subscribe rating on the back of healthy yield potential, organic growth, opportunities on rent and potential inorganic growth through assets addition. Lastly, Geojit Financial Services also gave a subscribe rating and said, considering the strong growth story in consumption space, healthy projected net operating income which is NOI growth of 17% over FY24-26E, capital appreciation prospects and healthy balance sheet with lower LTV ratio, we assign a subscribe rating on a long-term basis. Now let's finally take a look at some of the strengths and concerns. Strengths. Renowned sponsor. Blackstone is one of the major pluses for the company. It has global real estate AUM of $326 billion spread across 1,475 MSF of leasable area with global expertise and local knowledge. Number 2. The company's assets are highly occupied by a diversified tenant base of popular domestic and global brands. Number 3. Strategically located assets in prime locations. Number 4. Well positioned for strong organic growth through a combination of contractual rent escalations, increased tenant sales leading to higher turnover rentals, releasing at higher market rents and lease up for vacant area. Now, some of the risks and concerns are a decline in footfall in its urban consumption centers has in the past and may in the future adversely affect its revenues, lower than expected net distributable cash flows, and lastly, unfavorable cash flow distribution mix.